Hi, good morning. Thanks so much for tuning in. You're watching Ask Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. It's not as much excitement as you saw yesterday, and that's understandable, Mahima, because yesterday on the benchmark level itself, we moved up 900 points. Yeah. So it was expected that we would see a little bit of a cool off, and that cool off has come through. In fact, early on in the session, we managed to tread in positive territory, but that was a very short period of time. There is selling that is in evidence, and there are a few pockets where profits are being booked because we've moved up very, very quickly over the course of the last couple of weeks, notwithstanding that 1 week of uncertainty where you saw the markets move a little bit sideways. But you have 24,670 or thereabouts on the benchmark Nifty 50. Let's take a look at the broader markets as well to see where they're at. In fact, the broader markets are in the green. You have the mid-cap index that's up about 0.4%, and the small-cap index that is up about 0.7%. And as a result of which, I wouldn't be surprised if the advanced decline ratio is not too terrible at this point. In fact, it is positive. It is, in fact, quite positive in favor of the advances. Let's take a look at the contributors on the Nifty 50, just to give you a sense of what is moving. And you have a couple of the pharma names that are contributing, but not too much. In fact, the heavyweights. And these are the same names that had led to a considerable up move in trade yesterday, the likes of HDFC Bank, Infosys, ICICI Bank, Reliance Industries, and one more entity. I had looked at it, they contributed over 350 points just by themselves. So a little bit of a cool off for some of these stocks is warranted and par for the course. But let's look broader and see a few names that are moving in trade today. And I'm sure that Mahima has more on her list. But a few stocks that are moving quite dramatically. One is Tanla Platforms, where you're seeing a promoter buy that has taken place in a block that took place not too long back. It was something that we had talked about in the opening. It's up about 9% or thereabouts. Something like Aether Industries, where there's also promoters selling in order to meet the public shareholding norms. That offer for sale starts today, and the floor price was a 13% discount to yesterday's closing price. That gets taken place over the course of today and tomorrow, the offer for sale. And so it has come off the low point of the day and is moving higher. A couple of other names that you should watch out for. One is Ventive Hospitality, and this is a stock that was up about 7% or thereabouts in early trade, but it's given up quite a bit of ground. The earnings were quite good. In fact, the revenue growth was very substantial, but the margin picture has deteriorated a little bit. But you have a healthy growth in the bottom line as well on account of the top line growth that the company witnessed. And Chalet has actually moved into the red. It is down about 2% or so from what so it's recovered a little bit from the low point, but it's still down about 1%, despite a reasonably good quarter in the fourth quarter.
Absolutely. For something like a Chalet, occupancy was at 76%, for Ventive also at 71%. Good set of numbers. In terms of one more block deal by promoter, KFinTech is also in focus on the back of that. There is Paytm also, where Antfin is set to sell around 4% stake. Both of these counters, in focus on the back of stake sales and block deals. Some other counters which are doing well, there's Aarti Drugs up 6.5%, KPI Green up 6%, Sterlite up 6%. India Glycols, Reddington, I believe, on ahead of its earnings is buzzing today. Something like a Godfrey Phillips is also doing well. Some counters under pressure. UPL saw a good uptick yesterday in trade post its earnings, but today it's seeing profit booking down by about 4%. KFinTech, Alex mentioned earlier, Chambal Fertilizers down by about 3%. Welspun Living, a lot of these textile companies are seeing profit booking now. After the UK FTA announcement, these textiles did soar, but now seeing profit booking. Welspun Living, KPR Mills are some of the counters seeing that kind of pressure. We also have something like Infosys, Krasna Diagnostics under pressure. We have counters like Oracle Fin, Macrotech, Happiest Minds also not doing very well in trade today. Let's also pull up the BSE 500 and see what counters are buzzing there. If you can pull up that quickly, there you go. UPL, Chamal Fertilizers, Aether, Infosys under pressure. Tanla, Aarti Drugs, Sterlite, Reddington doing well in trade today. But with that, let's also welcome in our guest for the day, Swati Hodkar, AVP Technical Research at Nirmal Bang, and Astha Jain, Senior Research Analyst at Hem Securities, joining us now. Welcome to both of you, Astha and Swati. My first question is from Savana Kumar, who's writing in from Bengaluru. He's bought NHPC shares, 6,000 odd shares at 89 a piece on Jan 25th, and wants to know an outlook from a month's time perspective. Swati, I'll quickly come to you on this one. What are the charts indicating for NHPC right now?
First of all, good morning, all of you. Definitely view is positive on the technical front from the NHPC. As of now, we are witnessing that the stock is taking a very strong resistance of the 20 days moving average, which comes to nearby 85 levels. Any move above that level on the closing basis will extend this positive rally towards to at least 90. So I will suggest to hold on the long positions because the setup on the technical front is really positive. This uptrend likely to be continued towards to 90. If you're looking for any kind of a stop loss, 81 rupees is acting as a crucial supports level. So by keeping that as a stop loss, you can hold your long positions for a 90 rupees target.
All right, so that's the view on NHPC. Good morning, Swati as well. Astha, thanks so much for joining us today. By the way, we didn't mention, because I think most of you already know this and you can see it on the screen. The number that you see on the top of the screen is where you can send us WhatsApps, and you can call us on the number at the bottom of the screen. We'd be glad to speak to you as well. Mani from Rajamundri is asking about Enviro Infra, and he's planning to hold this for the long term despite the fact that he's incurring a loss right now. He's bought at levels of 257. He's got a significant quantity, 2,000. It's a relatively new listing, but he's lost ground in the profit taking that might have come through. And so, Astha, on the fundamentals, if you had coverage, what's the view on this one? Would you hold?
So yes, we were the merchant bankers in this IPO when the IPO came. I think it was on 26th November, and the price band was between 140 to 148. But due to compliances issue, I cannot comment more on that part. So sorry, Alex, because we were the merchant bankers, so I cannot comment on that company right now.
Appreciate your honesty, Astha, and thanks for that. Swati, I'm not sure if you have enough data on this. Would you be able to comment?
Yes, Alex, whatever the data I have, I believe that or on a very short term period, 140 is acting as a good support level. Sorry, 200 is acting as a very good support level. So as long as it sustains above that level, a positive momentums can be carried forward towards to 220, 230 levels. So if you're having any long positions, please keep the strict stop loss of a 200 rupees and hold your stock on a positive side.
The next question is on Triveni Turbine. We do not have the person's name, but okay, Rajesh is his name. Rajesh has bought 1,000 odd shares at 520 a piece, and sitting on a profit of 33,000 odd rupees right now, and wants a short-term view on this particular counter. Swati, I'll again come to you. Triveni Turbine, what are the charts indicating?
Yes, the overall setup is really positive. If you look on a larger degree, the stock is forming in a higher top side water formation. Also, the interesting fact that it is trading in an upward rising channel, which is a very positive indications on the technical front. If you look towards on the daily charts, the stock is well placed above all the important moving averages. So the overall setup is really positive, and the counter is slowly and steadily moving on the northward directions. Upside, I'm looking for an immediate target will be a 440, and beyond that 450 levels can be tested. Downside, it has a very good support of 400 rupees. So as long as the stock sustains about that level, I believe that this kind of a rally is likely to be extended towards to 440. So hold your long positions by maintaining a strict stop loss of 410.
Got it. Prabhakar is writing in from Huzur Nagar. I'm not really familiar where this is at. It's in Telangana. Thanks so much for writing in, Prabhakar. And he's asking about Indocount Industries, which he's bought at a price of 302. He's asking whether to hold or sell, and he's not specified his time frame, but he's holding with a decent profit at this juncture. So Swati, would you suggest holding on at this point?
Yes, definitely. This particular counter is really doing very well on the technical front. I believe that a more upside rally can be seen because at the current level 336, we are witnessing the price momentums and upward. If you look towards the chart patterns, 350 levels can be seen into this particular stock. So you can hold on this particular counter. 325 is acting as a very good support level. So by maintaining that stop loss, you can hold on your long positions.
Okay, and in fact, the stock has been gaining since both the US tariff with regards to textiles as well as the UK FTA. 75% of their revenue comes from the US and a lot of their revenue also comes from the UK, and which is why the counter has been buzzing since then. All right, the next question is from Ranjan, who's writing in from Bengaluru. Ranjan has 100 odd shares of ITC Hotel. The buying price is 178 and wants to know if this is the right time to accumulate more or not. Astha, you know, now that a lot of earnings for these hotels have already come in, your view first, of course, with respect to ITC hotels and, of course, Chalet Inventive, if you have a view.
Yes. So talking about ITC hotels, we are positive on this counter because what we have seen that after listing, it has shown some decent performance stock movement wise. And in fact, there were a limited track record and a limited financial statements to study at this point of a time. But the kind of expansion mode the company is into, I think definitely that will help ITC hotels to show good financial performance, which will in turn good stock performance as well. So idea here is to stay invested in this counter for the longer term. He has accumulated this counter, but right now I believe that one can stay invested in for a price target of around 220 or so. Talking about Chalet hotels as well, we have seen, because what we have seen in the other big hotels that the results were not that up to the mark. But for the Chalet hotels, we are positive on this counter because we are positive on the future outlook of all these counters, especially the hotel sector. And that's why Chalet Hotel is also looking strong to us. Price target can be set at around 920 to 930 or less.
All right, we've got our first caller for the day, and Sampath is calling us from Ooty. Hi Sampath, good morning and thanks so much for calling us. You're making me very jealous only because you're calling from Ooty and it's particularly hot where we are at right now.
I'm here on a vacation.
Oh, you're here? No, great. So you're making me even more jealous, Sampath.
I'm from Chennai basically, okay?
Okay, all right. What do you want to know about?
300 shares of Texmaco which I bought at 265, Alex.
Okay.
It's gone down now.
Okay, yeah, it has.
Should I buy an average or sell it off at this point of time? How about the fundamentals?
How the fundamentals? So you're talking about Texmaco Rail, I'm assuming, right?
Yeah, that's it. Yeah, right.
Okay,
right, you're right.
Okay. All right, so it's gone through a little bit of a correction, and let's get a fundamental view. Astha, if you can, he's lost quite a considerable amount of value. He's bought at levels of 265. The stock is trading at 144. Last 6 months down about 28% or thereabouts. Would you hold on to this? What's the view?
So Texmaco is basically a key player in the railway and the infrastructure sector, first of all. Secondly, I would like to inform that the results will be coming on 16th of this month. So on 16th May, they will be posting the Q4 and FY25 results. And thirdly, I think they have won one large order and it was in a recent talks. So, I mean, the kind of sector they are into, the kind of company this is into, because it is a part of some big group. I think this stock is has a potential to move upwards from here, and there is a reason to stay invested in this counter at least till the results come. So idea here is to continue hold this counter with a price target of around 170 and keep a close eye on the results as well as which will be announced on 16th May. And I think from there the picture will become more clearer.
Okay, so that's the view with regards to where Texmaco stands. Our next question is from Sanjay, who's writing in from Delhi. He's holding 12,500 odd shares of Ratan India Power, bought at 15.04 apiece. Wants to know whether he should hold, sell or add more at the current levels. So Adi, I'll come to you on this one. What's the view like where charts are concerned from Ratan India Power?
From 2024, we are continuously witnessing a selling pressure in this particular stock. We have seen a downfall from 22 almost now up to 7 to 8 rupees. Now, slowly and steadily, the counter is coming from the oversold zone and the price is showing upward directions. As of now, it is in a consolidation phase within the range of 6 to 11 rupees. Any move of a consolidation or say the breakout of the consolidation phase will take a counter towards to 14 to 15 levels. So for the short term period, definitely my view is positive. You can hold on your long positions. If possible, keep the strict stop loss of 8 rupees and carry your long positions for immediate target of 15 levels.
Okay. So that's it with regards to where Ratan India Power stands. Our next question is from Sanjeevi, who's calling in from Chennai. A very good morning to you. How can we help you?
Hi, good morning.
Good morning.
I had a question about CAMS India.
Okay.
I had actually started acquiring the shares about a year ago.
Right.
And I hold about 56 shares, which I acquired at an average price of 3653. So
Okay.
my question was, is it a good time to accumulate some more, or should I be exiting this counter at the moment? I'm looking at a 1 year to 2 year perspective.
Okay, got your query, Sanjeevi. I'll take this up with Asta quickly. Asta, in terms of the earnings for CAMS specifically, it was weak because of the kind of dip that equity markets saw overall. So around 3.1% was the overall impact in terms of its QOQ numbers in terms of the revenue growth. What's the sense like here? Should Sanjeevi accumulate more at the current levels in order to keep holding it for the next 1 year?
So yes, the results were low because what we have seen due to the stock market conditions. But still, there is one question to this, that they are seeing continuously strong flow in the SIP. So their non-mutual fund business is also working good, and in fact, they are continuously showing a good strength in the SIP also. So I think these two are the strong points to which are showing that this counter has a strong potential. Now, the other points which I would really like to emphasize is that the duopoly nature of the business. So there is only two players which are there in the industry. What we are seeing that the capital market condition is improving, and I think their market share loss risk is also very low due to all these factors. So overall, in the longer term, and now this capital market situation is again started improving, definitely it will help the company in posting good numbers going ahead. So I think it's better to stay invested in this counter. Maybe the poor results are there, so maybe this counter can move more downside from here. But in the longer term, it will again move upwards. This is what I believe. Stay invested with a price target of 38.50 at the prime level or initial level.
Okay, all right. So that's the view on CAMS, and quite a few of these plays are coming back into focus with the markets and the way that they've behaved. Let's talk about another stock and group of stocks, of course, that is in focus, and that's the defense pack. And Rohit from Bengaluru is asking about BEL, which is something that he's bought at levels of 304, and he's making a considerable profit at this point. He's only got a short-term view. He's bought 2,000 shares, and he's wondering what to do with this. Swati, on the charts, what would you do with this? Would you hold on? And what levels would you watch on the upside? Where would you put your stop loss?
Definitely, Alex, this particular counter as well as the sector is really performing very well from the last few trading session. If you look towards the BEL from the last 4 to 5 weeks, it's continuously giving a very positive returns. Now it is close near to its all-time high, which comes to nearby the 340. I believe looking towards the momentum or the strength of this particular counter, the stock is likely to test the new highs, which might take a stock towards 350 to 360 levels on the higher sides. So definitely you should hold on your long position because the price is moving on the higher side along with the volumes. So whenever the price and the volumes goes in hand to hand, the strength of the particular stocks gives a very positive sentiments in this particular stock. Hold on your long positions. 320 is acting as a good support levels on the intraday basis as well as on a daily basis. So keeping that as your profit stop loss, you can hold to your long positions. Immediate target will be at 350, and then beyond that 360 levels can be seen very soon.
Got it. All right. So that's the view on BEL. The stock is up and about in trade today as well, gaining close to 4%. Marco is calling us from Chennai next. Marco, very good morning to you. You want to know about Bank of India, right?
Yes, Alex.
Please go ahead.
So I just bought it after the good results. So I just want to know, should I accumulate the stocks for a bigger profits or exit for a short term?
Okay. And you've got a lot. Okay. But you bought it based on your expectation of long-term growth. Is that correct based on the results?
I didn't think actually. I just saw the results and bought it. So the results were very good. So I just bought it, and I haven't decided
Whether to hold.
confused. Let it for a long term or shall I exit for a small profit?
Okay, I got it. By the way, we're going to be speaking to the management Marco of Bank of India at 11:15 today. So I'd encourage you to check it out and listen to what they have to say. In the meanwhile, I'll go to Asta on this one. Asta, if I remember the numbers correctly, it was a decent set of numbers. Asset quality improvement came through. But what stood out to me and what I was wondering about is the compression in the NIM, which is quite considerable, which took place in the quarter, in the context of certain other banks managing to keep their NIM either the same as the previous quarter or improvement of NIM. How would you rate Bank of India?
Yes, so if I talk about the NIMs of this, then they're global and domestic, both NIMs, they were at around, global was at around 2.82%, while domestic is at around 3.01%. But the other ratios like ROE, ROA, they are looking very, very strong. ROE of around 15% seems to be very strong. So yes, the NIM compression was there, but the profitability was at the high level. Operating profit has shown a remarkable improvement. And in fact, their GNP and NNP ratios also shown strong reduction. So overall, apart from the NIM, other factors seems to be okay, and hence I'm expecting this counter to move upwards from here. Idea here is to stay invested in this counter with the initial price target of somewhere at around 125 to 130 odd levels.
Okay, so that's the view with regards to where BOI stands. The next question is from Ramesh, who's writing in from Thrissur, Kerala. He wants to know if he should buy Ola at the current levels and continue to hold. Swati, I'll quickly come to you on this one. Not sure if you have enough data now for Ola Electric. If yes, what are the charts indicating?
Yes, we have seen a continuously downfall whenever the counter has just shown a listing from 150 to almost 45 levels. Now on the technical front, if you look towards on a short-term degree charts, on a daily chart, the stock is forming the positive divergence, which indicates that the downside is limited. We might witness some sort of a reversal for a shorter period of time. So taking into consideration purely on churning basis or trading perspective, definitely you can take a long position at the current market price. Downside, it has a very crucial support at around 45 levels. So by maintaining that stop loss, you can initiate a long. Upside, this pullback rally can be seen or extended towards 260 levels. So 10 rupees upside can be seen into this particular stock. So definitely you can go for a long, but with the strict stop losses.
Okay, go for long, but with a strict stop loss is the view coming in on Ola Electric. Our next caller, Ajay, is calling from Ambala. Ajay, a very good morning to you. कैसे मदद करें आपकी?
या गुड मॉर्निंग मैम, गुड मॉर्निंग सर. मेरा क्वेश्चन मैम क्रॉम्पटन ग्रीव्स के ऊपर है. मैम मैंने मेरी पोजीशन 3000 शेयर्स हैं 335 पे. मैम इनका 15 को रिजल्ट आएगा तो इसलिए मैंने लिया है. और फर्स्ट ऑफ ऑल मैं स्वाति मैम को, उनको आस्था मैम को थैंक यू बोलना चाहता हूँ. लास्ट वीक मैंने LNT लिया था और उनसे पूछा था, उन्होंने कहा था होल्ड करने के लिए रिजल्ट पॉइंट ऑफ व्यू से. उसमें काफ़ी अच्छा हुआ था. थैंक यू फॉर आस्था मैम और स्वाति मैम को.
Okay, Ajay, thank you so much for those kind words, and I Swati and Asta, I hope you're hearing that. So compliments to you, both of you as well. Asta, I'll quickly come to you on this one. Crompton, overall, last quarter the earnings were disappointing, but before that the company has done well and it has maintained its guidance that it will be doing good in terms of where FY26 stands. What's the view like? Should we continue to hold?
Yes, because yes, on 15 the results will come and 23% of their revenue is coming from the premium account. Some of their segment, if I leave TPW fan segment, apart from that, the other segments are performing strongly. So I believe that in the upcoming results also, definitely there will be a sigh of relief. This is what we believe, and hence our stance is to stay invested in this counter till the results at least. And a price target can be set if everything goes well with the result, then 350 to 370 odd.
Okay, so that's the view on Crompton. Ajay, hopefully you've gotten the answer to your question. और हमारे साथ जुड़ने के लिए बहुत धन्यवाद. We will be back on the other side of this break to take more of your questions. Do stay tuned. Mahima is holding her head. She can't believe that I'm speaking in Hindi. Do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. Viewers just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screens right now. All right, the next question is from Nagakumar, who's writing in from Hyderabad. He wants to know whether he can invest into 100 shares of Siemens India at the current price. The current price right now is 2,921. Or should I wait for Siemens Energy to be listed, which will be a better counter to invest in, is his question. Asa, I'll come to you quickly. What's the view like? I mean, both in terms of, their working are very different. What should he do? Should he invest partially in both of these companies or one particular company?
Right. So talking about Siemens and Siemens Energy, basically the merger happened, and now Siemens is set to announce its earnings today. That is 13th of May, if I remember it correctly. So rather than doing anything now, just wait for the Siemens earning, updates, and then make entry into this counter, because both the counters are looking good to us, Siemens and Siemens Energy. But my idea here is to see the results, to review the results, and then make entry into this counter. And as they are set to announce it today only, so it's a matter of few hours, I suppose. So better to wait rather than making entry at this point of time.
Yeah, don't jump the gun. Wait for it, and you can watch the updates right here. In fact, we should have a story on the website soon. That's ndtvprofit.com, in case you want to read about the implications of this move by Siemens. We've got Suresh joining us from Hyderabad. And hi, Suresh. Thanks so much for calling us. How can we help you?
Hi, thanks for this call.
My pleasure.
I'm very good. I'm a very big fan of you for your smiley face.
That's very kind of you. Thank you so much.
Yeah, I'm holding Anoop Engineering around 30 shares at 3,300 rupees.
Okay.
In yesterday's price, I took a position in yesterday's price. May I know the short-term and long-term view for that? And I observed both FAs and DAs are increasing the stake, and retail investors are reducing the stake in this Anoop Engineering. So just I wanted to know short-term and long-term view for this Anoop Engineering.
Okay. This is not the largest company. It is manufacturing heat exchangers, reactors, pressure vessels, as well as industrial centrifuges. So interesting space that it's operating in. Asa, I'm just wondering, 6,600 crore market capitalization company, the Anoop Engineering. Do you have coverage, and what is the outlook that you see?
So this is a subsidiary company of Arvind Limited, actually, the Anoop Engineering. First of all, would like to state that fact. And it is I think in the year 2017, if I remember it correctly, Arvind Limited has decided to demerge this part, and hence we got it. So now one update that Anoop Engineering is also set to announce its numbers today only. So it's better to wait. Otherwise, I find this company to be very strong. Their financial performance was good, and right now just wait for the results to come in, because whatever comments I will be making, I think it's better that I would make it after analyzing the result. So right now, wait for the results and then make an entry, or if you have the stock in the portfolio, then continue holding the stock, but keep a close eye on the results as well.
Very quickly, I don't want to pressure you to give us a view, but then specifically on Anoop Engineering, what according to you are the key metrics to track if we have our viewer wants to track it?
So first of all, they have a very impressive, track record of delivering the order. So I just wanted to know about their order book status. So we are keeping a close eye on their order book status, what kind of status they are having over the order book. So this is one of the key factors which we are looking after. Otherwise, what we are expecting this counter to post a strong CAGR growth of around 30% in their numbers. So if the numbers come accordingly on that front, then definitely it can be said as a very good number. So these two things, first of all, the growth of around 30% in the top line, which we are expecting from this counter, and secondly, their order book position. These two are the key metrics to look after the results.
Okay, so that's with regards to where Anoop Engineering stands. Our next question is from Hariom, who is writing in from Karnal, Haryana. He's asking about Oil India, which is right now trading at, let's pull up the counter. There you go, trading at 415. He wants to know whether he should hold or sell at the current levels. He's holding 255 odd shares. Swati, I'll quickly come to you on this one. What are the charts indicating for Oil India?
The overall chart is definitely positive for a long-term period of time, but on a shorter period of time, we might witness some sort of a selling pressures. But on a larger degree, definitely the counter has given the breakout of the downward sloping trend line, which is a very positive indications on the technical front. Slowly and steadily, this counter will show the momentum rally on the higher side. Immediate target is 450. Beyond that levels, if it's sustained at least for 2 to 3 trading sessions on the closing basis, then further trend will be changed, and which might take a counter towards to 520 levels on the higher sides. So if you're looking for a larger degree or a long-term perspective, definitely you can hold on your long positions, and for a shorter period of time, if you're looking for any kind of a stop losses, 400 is acting as a very good support level. So as long as it sustains about at level, this kind of a rally likely to be continued. So by keeping that as your stop loss, 400 rupees stop loss, you can carry your long positions for the mentioned targets.
Okay, so that's with regards to where Oil India stands. Our next caller, Govind Kumar, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, good morning, madam. Good morning, Alexa. Good morning to all of you. Ma'am, actually, at the time of, I have long back purchased Sri Renuka Sugars 4,000 shares at the price of 48 rupees, ma'am.
Right.
Actually, at the time of government is ordered for ethanol blending, actually.
Right.
But an added an advantage I have taken as a dark horse bet, actually.
Right.
But unfortunately, this share is down, actually.
Right.
Can I add some more or book losses or wait some more for at least my price is coming?
Okay. Got
What
you.
is the fundamental view, ma'am?
Fundamental view. Okay, got your query, Govind. I'll quickly go to Astha. Astha, I'll come to you on this one. You know, lots been happening in the entire space with regards to government also raising their target for ethanol blending. What's the view like on the entire sector and Sri Renuka Sugars?
So first of all, the results will be coming tomorrow. So we really need to see that. But my view is positive on this entire sector, and definitely this industry tailwind will help the Renuka Sugar also in posting, good numbers as well as stock price momentum. So right now, just wait, because here the viewer asked whether he can wait or book losses. Don't book losses in this counter. Just wait for some more time, and then you can again review your query. Otherwise, in the sector, we are very much positive on this sector, and in the sector also, we are positive on this counter. So stay invested in this counter.
Got it. All right. I would like to borrow your notes, Astha, because you're on point with exactly when the results are and all of that. So if you don't mind, I'm going to steal them when I get the opportunity. Sandhya has got the next question. She's asking actually about a derivative trade, and I'm not sure if Swati, you're going to have a view. I did tell her that you would primarily stick to the technicals, but she's looking at Apollo Tyres. She's got a call option that she's acquired. 480 is the strike for May expiry. And she's wondering what the view on the technicals are, what levels to watch out for. She points out that the results are tomorrow.
Yes, the overall setup is definitely not so good on the Apollo Tyre as such. And if you look towards the chart also on the technical front, the counter has showing a negative crossovers from the overbought zone. So I believe we might witness some sort of a selling pressure. And if you look towards the 480 call data, probably is currently trading at around 13 or 14 rupees. Upside, as long as it doesn't give the breakout of either 16 to 17 rupees, we are not likely to see a positive momentum. So the counter will come down, and on option front, I believe 10 rupees can be seen on the lower side. So try to book your exit the long positions at the current market price, because my view is little bit cautious in this particular stock. So try to exit on every rise.
Okay, so that's the view with regards to where Apollo Tyres stands. Our next question, again, this one's for you, Swati. Dinesh is writing in. He wants to know whether ITC is a good buy at the current levels. That is 430, if I'm not wrong. Let's pull up ITC. There you go, 433. And this is from a 6 months horizon point of view. Swati, what are the charts indicating, and what's the upside like?
Yes, definitely. ITC is one of the good counter defensive pack one should definitely have into their portfolio for the longer term horizon. Yes, we have seen some sort of a correction into this particular stock from almost 485 to 400 levels, and from there onwards we are witnessing some sort of a reversals. If you're looking for a larger degree at the current market price, you can buy at least 20-30%, and if you're getting any dips towards to 380, 370 levels, that will act as a very good levels to take a long position. So if you don't want to miss out the rally on the higher side, so you should buy 20-30% at the current market price. Upside 440 is acting as a little bit a hurdle. Any move above that level and consolidation above that level will take a counter towards to 500 and 520 levels. So the longer term horizon is definitely positive. Buy on deep strategy should be applied to this particular stock, but definitely 20-30% can be accumulated at the CMP.
All right. Deepak's got the next question on Coal India. Deepak has bought 50 shares at a price of 402, and the stock is trading currently at very close to that buy price, 397 or thereabouts. Asa, the question is, FY25, they have not hit their targets in terms of production, in terms of offtake. What is the view on Coal India for FY26? Would you hold at this juncture?
Yes, so on the back of better e-auction premiums, this is what I believe the company has posted a strong, Q4 number. In fact, they have lowered down their employee cost as well. So looking after all these factors, I think it is a good stock to remain invested in. And my idea here is that definitely this stock has a potential to move till the level of 450 in the longer term, not in the shorter term. So for the price target of 450, I think it's better to stay invested in this counter rather than exiting. So hold is our strategy for this counter.
Okay, we've got a caller from Bengaluru, Lekhna. Have I gotten your name right? I hope so.
Yes,
and how can we help you today?
Correct.
Good morning.
Good morning. I bought Blue Star Company at the price of 1,929
Okay.
for short-term period, sir.
Okay. When did you buy this?
Recently, sir.
Okay.
15 days back.
Okay. Okay. And so when you say short term, how have you defined that, Lekhana?
For summer, right? That's
okay, just for the summer. Okay.
Sir.
Okay. Okay. Understood. And so did you have a target in mind for Blue Star? Did you?
No, sir.
Okay. All right.
No.
Let me help you then. Let me give you a sense of what the technicals are suggesting. And I'll come back to you, Swati, on this one. Blue Star, results are out, and it's been a little bit volatile in the recent past. Would you suggest holding on, and what levels would you watch for?
I will suggest to hold down at the current market price, but the overall view is little bit cautious. Looking towards the chart setup, the counter is continuously facing a very strong resistance, and we are hitting a profit bookings on every rise. The counter is not able to give the breakouts of the short-term moving average as well. But since for a shorter period of time, the counter is trading in the oversold zone, so the downside is limited from the current market price. I will suggest to bear more loss, not to exit the this particular stock at the current levels, because you will face a huge losses. But if you're getting any rise towards to 1800 or 1900, so because the counter always tests the 20-day moving average and then again it's coming down, so on every rise you should exit it, and I will not suggest to hold on these long positions for a longer period of time. So sell on rise strategy should be employed in this particular stock.
So that's with regards to where Blue Star stands, and both of these earnings, that is Blue Star and Voltas, did come on the same day. And it was an interesting comparison because Blue Star was not
and
as
Symphony
bad
also
as
came
Symphony
at the
also
same time,
came, right? But Blue Star was not as bad, but Voltas did much better than Blue Star, and that was reflected in the kind of stock reactions that we saw.
And though it's not in the same space exactly, Symphony was even better, right?
Even better, correct. All right. The next question is from Jaya, who's writing in from Bengaluru. She's been holding 55 shares of Polyplex from a 3-year perspective at an average price of 1316. She wants a long-term view on this particular counter. Astha, any view on Polyplex?
Sorry, I cannot comment on this because I don't track this counter.
No worries, I can understand. Swati, quick view on the charts on Polyplex?
Yes, my view is definitely positive on the monthly chart. If you look towards the line chart, the stock is on the verge of forming the head and shoulder pattern. It's on the breakout of the neckline. Upside, the breakout comes at around 1300. So very soon we are likely to see a breakout, and which will take a counter towards at least 1550, 1600 levels. So up to that level, we are likely to witness some sort of a positive momentum. So hold your long positions. Downside, it has a very crucial support at around 1150. So by keeping that as a stop loss, you can hold on your long positions.
All right, we've got our next caller. Purna Sai is calling us from Vijayawada. Hi Purna Sai, how can we help you today?
Hi sir, I'm holding Kalyan Jewellers share, sir.
Okay. And
I would like to know about the technicals, sir.
Okay, got it. And you're making a profit. What is the time frame that you have in mind, Purna Sai?
I can hold for up to 1 year, sir.
1 year, okay. Swati, on the charts, it's seemingly made a bottom. It's recovering. How would you trade this?
Yes, Alex, you are rightly pointed out, and from the month of the May, the stock has shown a very strong recovery from the lower levels, and it's trading at a pattern of the high top survival. Now it is trading at a cluster resistance of 545. Any move above that level will see the extension of this positive momentum towards at least 470 to 490. So up to that level, definitely we are likely to witness a positive momentum. So at the current market price, I will suggest to hold on your long positions. You can keep a 520 rupees as your profit stop loss, and carry your long positions for immediate target of 570 rupees.
That's it with regards to Kalyan Jewellers. The next question is from Atul Kumar from Aligarh. He has 20 odd shares of Premier Explosive bought at 725 a piece and wants a view on this. Ask a quick view on this particular counter.
I think one can remain invested in this counter for the price target of around 470. So we are positive on this counter, and our idea here is to stay invested.
Best. We got time for a couple more questions before we go to Bank of India. Skipper is the name of the counter, and we've got Niranjan from Karnataka asking whether he can enter at this level. If I remember correctly, the numbers were good on the fundamentals, but let me get a technical check. Swati, what's the view?
Alex, my view is a little bit cautious because I believe we are witnessing a very strong selling pressure at the 480 to 490 levels. A lot of time we have seen the stock has tested those levels but fails to give the breakout on the closing basis. So if you're getting any dips towards to 430, 420 levels, that level will be attractive level to take a long positions, but not at the current market price because the risk reward ratio is not favorable. So try to avoid this particular counter for the fresh long position.
Okay. All right. So, thank you so much to the both of you for joining in and for answering all the questions you did today. Absolute pleasure as always having you on the program. And we've got, as I pointed out, the Bank of India management lined up to get you a sense of how the outlook is going forward. Remember, the numbers were quite good. The bottom line has grown quite substantially. Though there is a question mark about the compression that they saw in the net interest margin, they've actually seen a very stark improvement in the asset quality as well. Let's listen in to what the management has to say.
I want to first start off with that margin number. It's compressed. Are we at the bottom? And if there were to be more rate cuts, how low could it go?
Yeah, good morning. Thanks for having me here. Yes, NIMs have come down. We are at a global NIM of 2.82%. It has come down. But if you see our overall NIM, so we have a 12% book, which is an international book also. So banks which have international book have NIM which is slightly less. But if you see our domestic NIM as on 31st March 2025, we are at a healthy 3.10%. So as regards the NIM guidance which is concerned, definitely there is some pressure on the NIM because of the falling repo rate scenario. So already we have seen the two cuts, one in February and another one in the month of April. And there are further cuts anticipated as per market commentary. So if the rate cut further goes down, the repo rate further goes down by say 50 basis point, definitely the margin, the NIM pressure would be at around 15 basis point. Nonetheless, we will be trying to maintain our NIMs, in fact improve our NIMs. A few strategies are there. One is improving the yield on advances by focusing more on MCLR linked advances. The second thing is with respect to controlling the cost of deposit by improving our CASA and retail term deposits, and also increasing the non-interest income. So that would be the overall strategy. This time we have done quite well as far as the non-interest income is concerned. This financial year FY26 will again try to do much better in the non-interest income, particularly with regard to the recovery in the return of accounts. So that will help us in protecting the overall NIM of the bank.
Point taken. So sir, if I were to sum the margin possibilities up, a 50 basis point rate cut exposes you to around a 15 basis point reduction in NIM. Is that correct?
Yeah, that's correct, because the transmission on the deposit side takes time.
I understand.
So the February rate cut, the majority of the transmission would take place by September 25, and the April rate cut, the transmission would happen by say October 25. So the transmission in deposit side takes time. That is why which creates the pressure on the NIM. Nonetheless, we have other strategies in place to protect our NIMs in going forward for FY26.
Correct. So lead and lag. So fully point taken. So when they recover, where should the margin number normalize at, sir?
So this financial year, we should be ending at a global NIM of at around 2.70%.
Okay. Point taken. Now, let me talk about other income, because that very strong growth in Q4, you believe there are one-offs. What explains it?
See, other income, if you see Q4 and then if you see the YOY basis, March 24 to 25, our non-interest income has increased by nearly 46% on a YOY basis. This has improvement is there because of the recovery in the return of accounts throughout the year, which is much better than which was last year. 61% is the YOY growth on that. As regards from the treasury income side, interest on the treasury income, there the income has tripled over the YOY basis. So these are the two key fundamental reasons for which the improvement in the non-interest income is there. We are focusing on the non-interest income very strategically so that the overall income improves and the pressure on the NIMs which is coming through the net interest margins and the net interest income gets reduced.
So, on the credit cost front, slippages in agri and MSME have both doubled on a QOQ basis. Is this just seasonality, or is it a cause of concern, and what's the outlook like for FY26?
So major portion of our slippage is coming from the MSME and agriculture, if you see. In the agriculture side, I can substantiate that there were certain changes in some of the state SLBC formula, wherein as per the IRAC guidelines of RBI, there were certain slippages in the agriculture side. But if you see on the YOY basis side, our credit cost has in fact come down on a YOY basis. It is now at 1.38% as against 1.56% last year. So we have reduced our credit cost by nearly 20 basis points. If you see the overall number, the number is flat at around 7,500 crores of fresh slippage which has happened. The slippage ratio in fact is 1.38, which I was telling. So the slippage is at around 7,500 crore, which is the same as per the last year. But this year we had one large ticket corporate slippage of around 1,000 crore of a PSU. Had not been there, the slippage ratio would have been much better. So, but nonetheless, in this financial year FY26, we are very much confident that the slippage in this year will be much lower than the number which was this year, and we'll be able to protect not only the slippage ratio would improve, but also even the credit cost.
But why is that so, sir? What gives you the confidence for FY26 versus what went wrong in FY25? Just give us that understanding.
So as I explained earlier, 1,000 crore was one single PSU which was there, right?
Okay.
So had that not been there, our slippage would have been only 6,500 crores as against 7,500 crores. That is one point. Second point is that if you see our SMA numbers 5 crores and above, the SMA number which was last year 7,100 crore in March 24, it has come down to 4,900 crores in March 25. There also to the total standard book of the bank, our this above 5 crore SMA is only 0.92%. So the credit call, otherwise the book asset quality is okay, fine with us, and the lumpiness in the SMA book is also because of few accounts which are of this one state PSUs. There also in all those 4 accounts we have state government guarantees, and we do not see any delinquency coming in that. So this year we are very confident that the slippage whatever happened in this year FY25, it will be much lower than this number.
Point taken. So give us the growth guidance and the credit cost guidance for FY26.
So as far as the growth guidance is concerned, deposits, we are giving a guidance of around 11 to 12%. And for the credit side, we are giving a guidance of around 13 to 14%. And on the credit side, credit cost side, you have seen that the credit cost of the bank has come down in this financial year, definitely, and overall provision also has come down, in fact, on a YOY basis by nearly 1,000 crores. For FY26, again, the credit cost, we should be down by another 10 to 15 basis point in FY26.
Point taken. So my last question again is going back to non-interest income. A large chunk of the non-interest income seems sustainable, but you've got around 700 odd crore of treasury income as well within that. So give us color. What is the recovery pipeline looking like for FY26? So what will that number look like? And second, with regard to other income, is that where is the normalized steady state number looking like? Are all the other line items outside of treasury sustainable? Even treasury, is it sustainable or not?
See, last year we had done a total gross cash recovery of 7,800 crores. This year our gross cash recovery is around 9,500 crores. FY26 we are internal management target, we have kept ourselves for a gross cash recovery of 11,000 crores in FY26. So that is the kind of number we have kept ourselves. So it will be incremental delta would be at around 1,500 crores in the gross cash recovery. As regards to the non-interest income is concerned, there also we are expecting a better numbers. There has been, as a strategy, we have built up our treasury book over the last 5-6 months when the interest rates were higher. Now in the falling interest rate scenario, when the repo rate is coming down, so we are anticipating that we will book some profits out of that book in the treasury book and earn some income, some non-interest income out of that head. Another important point in the improvement in the non-interest income is also the penal interest which was taken earlier as per the RBI circular are now coming in the penal charges. So there also there has been a bolster in the non-interest income because of the shifting from the penal interest to the penal charges. So that number is overall sustainable. As I said, that we will be doing good in the recovery numbers in this financial year also, and some gains will be there in the treasury also. Overall, keeping in mind both the things, our non-interest income will be remaining buoyant in FY26.
So FY26 full year ROA, what's the kind of number that one can expect with all of these levers that you have? Is it 1.1%, 1.2%? What's the bullish case?
Yeah, so if you see our ROA as a growth trajectory, we have improved our ROA on a YOY basis. Our ROA was 0.70% only in March 24, which is now on an annualized basis at 0.90%. If you see the quarterly glide path which is there in the ROA, we have touched the ROA of 0.98% in March 25. So that is the kind of number. In this financial year for the glide path, I would say that we would like to touch the ROA at 1% by FY26. And to touch that number, as I said already, we will be growing our top line numbers, our bottom line numbers, our operating profit and net profit, and also obviously our non-interest income and the key fundamental ratios which are there with respect to gross and net NPA, our credit cost and slippage ratio. All these things put together will help us to give a ROA of around 1% in FY26.
Okay, so some key numbers that you should watch out for with regard to Bank of India. One is that ROA number that was just spoken about, and also the global NIM, which is seen at 2.7%, the net interest margin. The quarter gone by, there was erosion, and you heard from the management why that took place and how it's expected to stabilize at 2.7%. The stock is doing particularly well. In fact, the Nifty Bank is down about 0.4%. So this is a bit of an outperformer in that pack. And the benchmark is actually off the low point of the day, still trading with cuts of about 0.7% though at 24,747. It has recovered from the low point of the day, as I said. IT as a pack is down about 1.3%. This is par for the course based on yesterday's move, where it ended 6.7% higher. So some of that steam from the rally is being taken out. In fact, let's look at the sectoral picture to tell you what's moving and what's not. Defense once again in focus as a pack is gaining as much as 3% in trade. The PSU banking pack, and you saw one of the components there, Bank of India, doing particularly well, up about 1.8% or so. You have the pharma index that is bouncing back from yesterday's underperformance, where it ended just about flat, and you have a few of those components that are doing particularly well, up about 1.6% or so. Energy as a pack is just about holding on, but you have IT that is the worst performer, down about 1% or thereabouts, and you have realty as a pack that is also not doing too well at this point, down about 0.7%. If you pull up the contributors on the Nifty 50, you will see that the heavyweights that pulled quite a bit of ground yesterday are actually leading the declines and contributing to most of the declines at this point. Infi, HDFC Bank, ICICI Bank, as well as Bharti Airtel, which by the way posts its numbers today in focus. There are in fact a couple more Nifty 50 companies that post their numbers today. Among them, Hero Motor Corp as well as Tata Motors should be kept on your radar. And if I'm not mistaken, Cipla as well is going to be posting its numbers later today. We've got all of that and more lined up over the course of the day, but starting with Know Your Company, that's up next. Do stay tuned. This is NDTV Profit.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.